What if I told you that the top Forex gurus make more money from you than they ever made from trading? Not a little more, dramatically more. We are talking 10 times, sometimes 100 times more. And here is the uncomfortable part. Most of them know this. They built their entire business around it. I spent 6 months reverse engineering how the guru economy actually works. What I found changed everything. I looked at their funnels, their course content, their income claims, and their actual trading accounts where they exist. Stay until the end, because the last thing I show you will completely change how you look at every trading account screenshot you ever see online. It always starts with the Lamborghini, parked in front of a mansion, posted on a Tuesday afternoon. Caption, "This is what freedom looks like." Here is a fact that will stick with you. In Dubai, you can rent a Lamborghini Urus for $850 a day. The mansion behind it, that is an Airbnb. You can book the same one for $1,200 a night. For $2,050, you have a full day of content, videos, photos, reels, 3 months of lifestyle posts. The guy selling you a $2,000 trading course does not need to be rich. He just needs to look rich for one afternoon. And before you think, I would never fall for that, the research disagrees with you. A 2019 study from Harvard Business School found that social proof of wealth increases perceived expertise by 34%. You do not consciously think, this man has a Lamborghini, so he must know how to trade. But your brain does. The association is automatic, unconscious, and almost impossible to override. This is called aspirational identification, and every guru funnel is built on top of it. So now you are following this person, you like the content, you want what they have. Then comes phase 2, the free webinar. It is always free, and it is always brilliant, because it has to be. The free webinar is not a sale, it is an audition. The guru proven, I know things you do not know. They show you a real concept, maybe support and resistance, maybe a specific candlestick pattern. You learn something, you feel smart, you feel seen, you think, imagine what the paid stuff is like. This is the hook, not the Lamborghini, the feeling of learning. In the marketing world, this is called a lead magnet. Give real value for free to earn the right to sell. And after the webinar, always at the end, always with the timer counting down, comes the offer. It is usually not the main course. That will be too much too soon. First comes the low ticket offer, maybe $47, maybe $97. A PDF, a short video series, a trading checklist. You buy it, of course you do. It is $47 and you just watched an hour of brilliant free content. But here is what that $47 actually bought you, your own data. You are now a proven buyer. In marketing, buyers are worth 10 times more than non-buyers because you proved you will spend money. Your email address just moved from the free list to the buyers list. The follow-up sequence changes. The next offer appears. Now comes the main product, the course, usually priced between $1,500 and $3,000. But it does not feel like a sales pitch. It feels like an upgrade because you already got value from the $47 thing. This psychological pattern has a name, the foot in the door technique. Small commitment leads to larger commitment. So now you have bought the course, $2,000 in. Let us talk about what is inside it. In most guru courses, about 60 to 70% of the content is things you can find for free on YouTube. I am not saying it is bad content. Support and resistance, trend lines, risk management basics. These are real concepts. But the information itself is not the product. The product is the feeling that you finally have the system. And here is where it gets interesting. Module 6 or 7 or 8, depending on the course. It is always there. The affiliate module. How to promote this course, how to earn commissions by referring others. On the surface, this looks like, here's a way to make extra money while you trade. But look at it from another angle. The course is teaching you to bring more people into the course. The product teaches you to sell the product. The curriculum is a recruitment engine. Have you ever wondered why so many Forex gurus on Instagram are all promoting the exact same course? Now you know. This is not illegal. It is not a pyramid scheme in the legal sense, but the economic structure is identical to a multi-level marketing operation. The people at the top, the original guru, they make money whether you trade profitably or not. The people who joined early and became affiliates, They make money whether you trade profitably or not. The only person whose outcome depends on actually trading profitably is you. Everyone else in the ecosystem is paid by your tuition. There is a term in sales called a captive audience product. It means the product creates the problem it solves. A course that creates more course sellers. The guru does not need the market to go up. The guru needs enrollment to go up. And enrollment goes up when the Lamborghini post goes viral, which is why there will always be another Lamborghini post. Let me show you the actual numbers. This is where the argument stops being theoretical. The average successful guru course launches with 500 to 2,000 buyers at $2,000 each. That is $1 million to $4 million from one course launch in 1 week. Now compare that to what it takes to make $1 million trading Forex. At a 5% monthly return, which is exceptional, you need a $20 million account to generate $1 million a year. Do you know how many retail Forex traders have $20 million to trade? Almost none. But a social media following of 100,000 people and a 2% conversion rate on a $2,000 course, that is $4 million. No trading capital required, no risk of margin call, no position sizing, no stop losses. You start to see why the course business model is so attractive compared to actual trading. Here is what makes it even more powerful. The course sells forever. 1 week of filming, one course generates income for 3, 5, sometimes 10 years. New students find a YouTube channel every day. Every new follower is a potential buyer. Meanwhile, trading profits require continuous skill, continuous market adaptation, continuous discipline. The asymmetry is staggering. One is a scalable passive income machine. The other is demanding active work. And here is the number that will change how you watch every guru video going forward. A study analyzing 127 Forex education businesses found that 78% of their total revenue came from course and mentorship sales, not from trading. Only 22% of what these businesses earn came from actual market activity, and most of that was performance fees on accounts they manage for others. Before I continue with the red flags, I want to be clear about something. On my Telegram channel at FX Austin, I post real trade setups with real entries, stops, and targets. Not lifestyle, not screenshots of someone else, real charts, real analysis, real outcomes, good and bad. It is free. Link is in the description. Now, back to the investigation. Because what I am about to show you are the 7 red flags that a guru is selling you a product, not teaching you to trade. Red flag 1, no verifiable track record. A real trader has a broker statement. A real trader can show you audited returns over multiple years. Not a screenshot of a winning trade. Not a MyFX book account with 3 trades. A multi-year verified performance record. The standard in professional trading is a GIPS compliant performance report audited by a third party. Ask any guru for their GIPS compliant statement. Watch how fast the conversation ends. Red flag 2. The lifestyle is the product. When someone spends more time showing you their car than their charts, that is the whole business model on display. Real traders obsess over setups. Real traders talk about risk management until you fall asleep. A guru who leads with the lifestyle is telling you the lifestyle is what I am selling, not the trading knowledge. Red flag 3. The testimonials are all from beginners. Look carefully at every testimonial in every Forex guru course ever made. You will see beginners who just started, not professionals who traded for 5 years after the course. Real skill takes 3 to 5 years to develop. The testimonials that should impress you are the 5-year stories. The 6-week transformation story is a marketing piece, not a case study. Red flag 4. The course promises a specific win rate. Here is what no real trader will ever promise you, a guaranteed win rate, because markets do not work that way. Anyone claiming 90% accuracy on a trading strategy either does not understand statistics or is deliberately misleading you. Even the best systematic strategies run by billion-dollar quant funds win 55 to 60% of the time. The edge in professional trading is not accuracy, it is risk-reward. Win 45% with a 1-to-3 ratio and you are profitable. A claim of 90% win rate is a marketing number, not a trading number. Red flag 5, no risk management content in the free material. Real trading education leads with risk management because without it, nothing else matters. If the free content is all setups and entries and signals and risk management is locked inside the paid course, that tells you everything about what they value. They value your enrollment, not your account survival. Red flag 6. The community is a sales environment. Every premium guru has a community. A Discord, a Facebook group, a Telegram channel. Look at what gets celebrated there, what gets pinned, what gets shared. If it is winning trade screenshots, lifestyle posts, and welcome new member banners, it is a retention tool, not an education tool. Real trading communities discuss losses. Real communities argue about setups. Real communities have hard conversations about risk. Red flag 7. They resist any external verification. A real expert welcomes scrutiny. A real expert says, "Here is my statement. Verify it yourself." Think about the last time you asked a guru for the verified trading history. What happened? Because genuinely profitable traders are not hard to verify. The ones who resist are almost always protecting the gap between what they claim and what they actually do. Now I want to address the most common objection I get when I talk about this. Someone always says, "But I learned something from that course. It helped me understand trading better." And I believe you. The content can be real and useful. The information quality does not invalidate the business model critique. You can learn genuine skills from a course primarily designed to generate enrollment revenue. Both things can be true simultaneously. So what does legitimate trading education actually look like? Because that is the real question. Here's what I look for. First, the educator trades their own money with verifiable results, not managed accounts for clients, their own capital, their own risk, their own skin in the game. When someone trades their own money and publishes the results, they have something to lose beyond your respect. Second, the business model is transparent. They make money from education. They say so openly. There is nothing wrong with making money from teaching. The problem is pretending you make it from trading when you do not. Third, the education focuses on process, not outcomes. Risk management first, setup criteria second, trade management third. A course structured around outcome promises is a sales funnel. A course built around process development is actual education. Fourth, the educator talks openly about losing periods, about drawdown, about the difficult months. A guru who has never posted a losing month is either brand new, extraordinarily lucky, or showing you only what helps their sales. Fifth, the community shares failures without shame, because in real trading, losses are part of the methodology. The single biggest sign of a legitimate educator is how they handle public losses. Do they hide them or analyze them openly? Here is a test you can run right now. Go to any trading educator you follow. Scroll back 6 months in their content. How many losing trade posts do you see? For most gurus, 0. For real traders, at least 40% of their trades are losses. Because that is what a 60% win rate looks like. Almost half your trades are red. That is normal. That is professional trading. If you see nothing but green, you are not seeing their trading, you are seeing their marketing. Now let me tell you what real trading education actually gives you. It gives you a methodology you understand deeply enough to adapt when the market changes. It gives you risk management rules so internalized, you follow them under emotional pressure. It gives you a framework for analyzing your own performance without needing the guru anymore. Real education creates independence. Fake education creates dependency. Ask yourself, which one does your current educator build? Because the guru business model fundamentally requires that you stay a customer. When you become independent, you stop buying. Real education wants you to graduate. Fake education wants you to stay enrolled. So here is my 3-question framework for evaluating any trading educator before you spend $1. Question 1. Can they show me audited returns spanning at least 2 years across different market conditions, including drawdown periods? 2 years is the minimum because it covers at least one significant market shift, a bull run, a choppy period, or a major economic event. If they cannot or will not show you this, that is your answer. Do not buy. Question 2. What percentage of their documented students trade profitably after 2 years? Not after 6 weeks, after 2 years. Because that is when the market separates real strategy from lucky streaks. A legitimate educator tracks this. They know their student outcomes because they care about their outcomes. Any business that cares about customer success measures customer success. If they have no data, that tells you why. Here is the uncomfortable truth this question reveals. 90% of Forex course creators have never measured long-term student outcomes. The industry average for retail Forex profitability after 2 years is under 20%. Most educators are not improving that number. They are cycling through new students. Question 3. What does the free content look like consistently over 6 months? A real educator discusses market structure in depth. They argue about trade setups. They analyze the key levels of the week. A marketer discusses lifestyle, mindset, and motivation. Important topics. But they are the side dishes, not the meal. If the technical content is behind a paywall and the free content is primarily inspirational, that is a business model, not a curriculum. You now have everything you need to evaluate any trading educator with clear eyes. The full checklist: verified multi-year track record, transparent business model, process first curriculum, publicly discussed losses, and a community that argues about risk. One more thing before I wrap this up. The gurus are not going away. The Lamborghini posts will keep coming. The countdown timers will keep running. Because the model works. It keeps working as long as people want to believe that someone has the secret system that makes trading easy. The only protection is knowing exactly how the machine operates. And now you do. If you want to follow a real trading account, come to Telegram at FXH Austin. Every week I post live setups on Eurodollar, gold, and other major pairs with complete entry, stop loss, and target levels. I post wins. I post losses. I post the weeks where I reduced position size because conditions were unclear. That is what real trading looks like. Free. Link in the description. Now for the final thought. The trading guru business model is not a conspiracy. It is not even unusual. It is the same model used to sell cooking classes, fitness programs, and business coaching. The problem is not that people sell trading education. The problem is when the money flows only in one direction. When the educator profits from your tuition and never from the market, their incentive is your enrollment, not your success. That misalignment of incentives explains every Lamborghini post, every countdown timer, every 90% win rate claim. When you understand the machine, you can still buy from it. But you buy with your eyes open. You evaluate the content on its own merits. You verify the track record. You watch how they handle losing months. You become the one thing the guru funnel does not account for: an informed buyer. The machine keeps running, but now you see it. And that changes everything about how you learn to trade.